Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, September the 28th, and just wanted to take a brief minute to discuss what markets did last week, as volatility did definitely creep back into the market, with the S&P 500 having a negative week, down 2.93% on the week. The mid cap index was down down 3.46%, and the S&P 600, which is a measure of small caps, was down 3.5% on the week, actually turning that index negative year to date. And so I wanted to take some time to discuss really what's causing this volatility and what we can expect for markets going forward. Because remember, we're in a quiet period right now. We're a couple of weeks away from starting to get corporate earnings for the third quarter of this year, and companies can't release any news that could potentially move the stock. The only thing to do is pre-announce either up or down guidance-wise on their earnings and revenue. So they're keeping news relatively quiet. And so that has allowed, starting last week, we had the Fed Bank meeting where Fed Chair Jerome Powell basically let us know interest rates are going to be higher for longer. And the market had not anticipated that, and the 10-year Treasury was around 4.25% at the time of the Fed meeting last week. And then you fast forward to here, and you saw yesterday the 10-year Treasury on another volatile day. You saw the 10-year Treasury hit 4.65, its highest level in 15 years. So quite a move in the 10-year Treasury. Now, as we had said a couple weeks ago, we believe that long duration and long end bonds needed to come higher because that 2% inflation is going to be a hard thing to hit, that the Fed's going to be able to hit. So if you're stuck around 3, in 3.5, you're going to need interest rates on the long end to be a little bit higher to justify investing in that asset for that duration of time. Again, you're taking your risk and taking it out 10 years, and you want to be paid a premium over what inflation is, and that's what you're seeing. So as we've moved into this week, you've seen commodity, especially oil prices, move higher as we're getting closer to the winter, especially LNG. And as inventories, as the Saudis and OPEC has cut inventories, you're seeing that pressure on oil prices moving higher. But what's really been a cap on stocks has been the 10-year Treasury. And as the 10-year moves higher, stocks are selling off. When the 10-year moves lower, stocks are recovering a little bit and bouncing just a little bit, but nowhere near as bad as they're falling. Volumes continue to remain very light. That can be both a good and a bad thing. It's never a good thing when you have high volumes and you have a high down day, but it's also not necessarily a sign of a very healthy market if you don't have any buyers. So what we have to do as investors is can know that the short end will eventually come down. The Fed will eventually cut rates. It will not be as quickly as the market had anticipated in the first half of next year. It may be longer than that before the Fed actually cuts rates. So eventually that short end is going to come back down, but it's not going to come back down to the pre-pandemic and the pandemic lows that we saw of zero interest rate policy. So we're going to have to, as a stock owners and as investors, you're going to be competing with treasuries and bonds and corporates, the levels like we saw back in more healthy environments in the 80s and 90s. That doesn't mean that stocks can't still move higher. They certainly will over time. It's just there's new competition, and this era of free and cheap money may be over, which is okay. We get back to some more normalcy and some more normal, historic, normal markets where what you do matters and your fundamentals matter. And that's what we look forward to. And so if you have questions about how to navigate this volatility as we're heading into earnings season, feel free to give us a call. We'd be happy to walk you through how to navigate this. As a long-term investor, find names that you like, and when there are big down days, scoop them up. It's great opportunities if you have a time horizon over the next 1 to 3 to 5 years. So as always, if you have questions, call us. You can reach us at 904-346-3460. Or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.